Well, good morning, and yes, it is Friday, May 24th, 2024. It is the start of the Memorial Day weekend and really the official kickoff this summer here in the United States. So I am Kenny Polcari, your host of the party, and here are the things you need to know because so exciting yesterday. Or was it, right? Well, by now you know that Nvidia bucked the trend, right? I mean, the market sold off, yet Nvidia rose by 9.3%, and you know why. Stocks and bonds, though, got whacked as reality becomes real, right? And it's a long weekend, so don't make an overly emotional decision about what happened yesterday. Just go and enjoy yourselves. And what are we having for dinner this weekend? We're gonna have the baby back ribs on Memorial Day cookout for a barbecue. Now, first, let me just say happy Memorial Day weekend to everybody and thank every single veteran that's in this country. So make sure you thank them and make sure you hug them, right? Now, if you know me, you know that I'm committed to our veterans, right? Specifically because of my own 9/11 experience, which is a whole different story. And so my wife and I work hard to support them in their search for quality mental health care. And again, if you know me, you know I'm passionate about the Headstrong Project, right? GetHeadstrong.org is their website. And its mission to provide our nation's service members and veterans with no cost, easy to access, and confidential mental health treatment. Headstrong's life-saving work wouldn't be possible without partners like Carlisle Companies, right? This month, Carlisle employees are participating in a fundraising campaign to get active and raise critical resources for Headstrong clients. As we head into the Memorial Day weekend, I'm asking if you'll consider contributing to this very, very worthy campaign. Every dollar helps us make a difference in the lives of our nation's military heroes and their families. You can find the link on my on my Twitter account at Kenny Polcari. You can also find it on my LinkedIn account, Kenny Polcari. Right? Just a quick support, small or big, doesn't make a difference because every little bit matters. Okay, and let me just say, I would thank you from the bottom of my heart. You have no idea what a contribution like this can make in the quality of mental health care for the veterans and their families. Okay, so now what do we do? Oh, wow, look at that fish down there. Okay, wait. So what am I doing? I guess it wasn't a day of wine and roses, right? Stocks go whacked, except of course Nvidia, which gained 89 points or 9.3% to end the day at 1,038. But let's remember, Nvidia is not the market. We may like it to be, especially after days like yesterday, but it is not. Now, although I would say if you owned Nvidia yesterday, maybe it felt like wine and roses, and it did certainly help cushion the blow for the balance of the portfolio. Now look, there are many versions of the song The Day of Wine and Roses. It's a 1961 classic. Andy Williams sang it, Shirley Bassey, Perry Como, even Tony Bennett. But I prefer the Frankie version. So enjoy, because I also gave you that link in my note. You can find it on my Twitter as well. Anyway, stocks and bonds fell as the latest economic data keeps lining up on the side of, guess what? No rate cuts, while leaving open the possibility of a rate hike. And as much as they try to poo-poo that idea, it's just not going away. After the release of the minutes on Wednesday, and then after yesterday's economic data, the tone has definitely changed, at least for now. The Dow yesterday lost 605 points, or 1.5%. The S&P lost 40 points, 0.7%. The Nasdaq only gave up 65 points, or 0.4, because you can thank Nvidia. The Russell gave up 33 points, or 1.6%. The Transforce lost 185 points, 1.2%, while the equal-weighted S&P gave up 97 points, or 1.4%. Recall what we discussed yesterday prior to the release of the manufacturing and services PMIs. We asked, what would these data points show? Both were expected to be hugging kind of the neutral line, but the risk was to the upside, not the downside. And bam, manufacturing PMI, which was expected to be in contractionary territory, came in at 50.9, which puts it into expansion mode. Services PMI came in even hotter. It was expected to be 51.4, already in expansion mode, and it came in at 54.8, deeper into expansion mode. Both advances a result of input prices, which continue to rise sharply, right? But you'd say, well, isn't that a good thing? Well, it might have been a good thing had we been in this deep, dark recession or coming out, but that's not where we are. And all that did was reiterate the difficult position that the Fed is in. Again, how can they or he, JJ, consider cutting rates when the economy continues to run hot? And here's the answer: he can't. Remember, the U.S. is a 75% services economy, so anything that suggests services is on fire flies in the face of a slowing economy. And all that does is confirm what we already know, right? Hold on to your hats, because do not expect any rate cuts in 2024. Just not happening. All right, so can we stop that now? Apparently not, because the swaps team is now pricing in a full 25 basis point rate cut in December. Okay, at least they got off the June, July, and September and November narrative, right? But let's go with that. If that's what they want to go with, let's go with that. I still don't see it, but it could change. And yesterday, to clarify the services point, I pointed out what CNBC was running with, right? Hospitality services, think household help in Palm Beach, and they are on fire. Household help now commands salaries of $150,000 to $200,000 a year, along with benefits, 401ks, maternity leaves, paid vacations, paternity leaves, all that stuff. But these aren't just come in and clean the house rolls, right? Oh, no. They are much more sophisticated than that. Remember, it's Palm Beach, it's Mar-a-Lago, it's Bon Jovi, it's Sly Stallone, it's Tommy Hilfiger, and more. You can find them on Worth Avenue, at Cafe Belay, the Brazilian Quarter, out at the Polo Grounds in Wellington. Now, the VIX surged by 8% from the low to the high before ending the day up 4%. Recall what we discussed. It was trading at levels suggesting complete complacency, nothing to fear kind of complacency. And all we needed was just one unexpected headline to disrupt the place. And boy, we got more than one, we got a couple. On Wednesday, we found out that there are many members of the FOMC that are more concerned about rising inflation than not. We found out that the services PMI is hotter than not. We found out that new home sales fell by 4.7%. And this is in addition to the hotter PPI report that we got 2 weeks ago. This suggests next month's CPI report is going to be hot as well. Every sector of the 11 S&P sectors came under pressure. 8 of them down over 1%. Real estate getting hit the worst, down 2.1%. Utilities down 1.7%. Consumer discretionary down 1.6%. Financials were down 1.4%. Consumer staples down 1.2%. Industrials down 1.2%. Communications down 1.1%. Healthcare down 1.1%. Energy down 0.9, basic materials down 0.9, and technology was down only 0.8. Again, thank you, Nvidia. Winners? Of course there were winners yesterday, right? And you know who they are. They were the contra trades, right? The dog was up 1.6, the SH up 0.8%, the PSQ up 0.5%, the SPSX, which is the triple leverage short, was up 2.5%, while the VIXI, which is the fear index ETF, was up 1.3%. Bonds came under pressure as well. The TLT down 0.6, the TLH down 0.5%, while the AG index was down 0.3%. The 2-year bond yield rose to 4.92%. The 10-year rose to 4.46. Still rates that may appear high now, but may not appear high in 3 months. Now, remember, Janet has to continue to bring more supply to the markets in order to pay for all the spending that the Bidens and Congress are doing. And more supply is going to result in lower bond prices, and lower bond prices results in higher yields. Oil came under pressure again as the latest economic data suggested sticky inflation and higher rates. West Texas Intermediate settled at $77, levels last seen in March. It is now down 11% off the April high and is down 4% just this week alone. This morning it's down another 50 cents at $76.50, but it's the start of the summer driving season, right? It's Memorial Day. And the EIA tells us that the gasoline demand is, guess what? At its highest level in over 8 months. So I'm confused on where this demand destruction is. Analysts tell us that we as Americans account for 1/10 of the global oil demand. So expect to hear a lot about how much driving we're doing over the next 3 or 4 months. Next week brings us the OPEC Plus's next meeting, and you can bet that $76 oil is not what the kingdom wants. So watch out for new threats to oil supply. Think further production cuts to help oil stabilize. We now have pierced the trend line support at 77.53, which I pointed out earlier this week would mean that a move down to the 75.50-ish level would not be a surprise at all. For now, I think it holds here as speculation builds around what OPEC Plus is going to do. Gold is another asset that we discuss daily. Yesterday, it tested the trendline support, which we talked about, and it appears to have held, something I thought was in fact going to happen. This takes gold down 5% on the week, back to early May levels. The pressure driven mostly by the latest narrative of higher for longer. But don't discount the power of foreign buying. Chinese demand remains a major source of demand, right, for gold, along certainly with other foreign countries, and that should help keep further losses limited for now. I think we remain right here. 2360 is trendline support. I think it holds that. 2400 on the upside. U.S. futures are trying to rebound a little bit after the beating they took yesterday. Dow futures are up 46, S&P's up 11, Nasdaq's up 30, the Russell's up 8. Now, eco data today includes durable goods orders expected to be down 0.8. Durable goods ex transports expected to be up 1/10. Capital goods ordered up 1/10. Capital goods shipped up 0.1%. And of course, there's the University of Michigan surveys out today. But remember, it's a long weekend and it's the start of the summer. Volumes are going to be anemic, and most likely anemic every Friday going forward, which means that moves can be exaggerated. So don't stress over this. In fact, go and enjoy yourself and find some wine and roses. The S&P closed at 5267, which was down 40 points yesterday, making a lot of retail investors a bit nervous, only to ask, what now? To which I would answer, do not make an emotional decision. We're still much closer to the top, right? Much of what happened yesterday is just reckoning of the data that has been telling us all along that inflation remains an issue, and the idea of multiple rate cuts was misaligned with reality. So we're still close to the top. So yesterday's 1+% losses do not suggest disaster at all. Look, what the market has shown you is that 5.25% rates are not usurious, right? Nor have they been a detriment to equity performance. We can have a healthy stock market and a healthy bond market with rates right here. So the higher for longer narrative is not what keeps me up at night. It's the threat of higher rates, right, from here to due to sticky inflation, and that's what keeps me up at night. So I want to see how the brain trust in DC handles this latest data. In any event, have a great weekend. Happy Memorial Day, and God bless our veterans. Okay, so what are we going to have for dinner? Well, it's Memorial Day weekend, so there's a barbecue coming, right? So there's so many things you can do at the barbecue, so let's just try the baby back ribs. But that's going to be along with your hamburgers, your hot dogs, your coleslaw, potato salad, watermelon, and of course, apple pie and vanilla ice cream. How can you forget that, especially on Memorial Day weekend? Okay, so for the baby back ribs, this is so simple. It's so simple, right? You're going to just get 2 pounds of baby back ribs and Sweet Baby Ray's barbecue sauce. Again, they come in a variety of flavors. I use the original. Preheat your oven at 375 degrees. Bring a large pot of slightly salted water to a rolling boil, and then just cut the ribs kind of in sections and drop the ribs in the water and bring them back to a parboil for 2 minutes after the water begins to reboil. After that, remove them, set them aside, put them in a large roasting pan, season them with a little bit of salt and pepper, cover them tightly, and put them in the oven for 1 hour. Then take them out. Now add the barbecue sauce, making sure that you coat the ribs all over on both sides. Close it up, tighten it again, put it back in the oven, and cook it again for about 30 additional minutes. Now, pull it out, because here where you can finish it, either on the grill, light your grill and finish these off on the grill, or if you don't want to do that, just turn your broiler on, take the tin foil off, and put the pan back under the broiler, but put it in the middle rack. Don't put it right up against the heat, because you'll burn them too quickly. So put them in the middle rack and let them broil for a little bit, flip them over, broil the other side, then pull them out, slice them up. The meat should fall right off the bone. They are delicious. They're relatively easy to make. They go a long way for a barbecue. You can make 3 or 4 racks of them, along with the hamburgers and the hot dogs and everything else. You're going to have plenty of food. Don't you worry about it. And if there's any left over, they're even better the next day. Listen, have a great weekend. Until Tuesday, take good care.